Hey everybody, it's Pete. Welcome. Good morning. Welcome to this episode of today's Best Stock Picks. It is Monday morning, June 8th, 2020. And I think the theme of today is last week was awesome. Last week was amazing. I'm going to use Twitter as an example today as what I see heading into this week, especially with the FOMC. Excuse me, especially with the FOMC this week. I don't think that there's really so much indecision about what the Fed's going to do. I don't think they're going to do anything, quite honestly, and I think that's what's expected. The question is, how does the market react ultimately to what is expected? Do we get to a point where it's sell the news? Okay, that's what we expected, now sell the news. But that's not really what I want to talk about today. What I want to talk about today is focusing on how and when do you get involved when the market feels like it's overextended? Because that seems to be a lot of the feedback I'm getting, especially in emails over the weekend of people who are in what they would consider, and I would consider, quite frankly, really good trades, now asking, what do you do? So, for example, on Friday, we had the airline stocks explode to the upside, and then what do? Do you buy after something's up 40% in a couple of days? Do you buy after something's doubled in 3 days? It's not really a high probability trade to initiate a new position at that point. Could it continue? Yeah, it could. The odds of that happening, though, are pretty slim. So in my world, where I look at order flow, I'm really starting to look for it to consolidate at this point, and then look for another spot to get involved. Best case scenario, we pull back without bad news. Obviously, we saw a pretty big pullback last week in work and Zoom, so Slack and Zoom. We'll take a look at those charts really quickly. And now you have to make a decision. Do you want to buy these stocks that were super strong for a long period of time and riding the wave of the current events in the world, and now has that changed? And if you remember last week, I said, okay, it's great that they reported that, but with a lot of the world reopening right now, it's going to be incredibly difficult for them to maintain those numbers, and the reason that they exploded to the upside in the first place. And we kind of saw reality coming back to the ground last week. So now we have to discuss trading opportunities in those stocks. Two of the biggest focus stocks we're going to have today are stocks that did explode last week that are in everybody's mind today, and you want to make sure that you have these on your radar today, which is OXY and Chesapeake. So we're actually going to start with those. We're going to take a look at those first, right after we get into the market. So obviously the weekly chart of the SPY, we are continuing to be well bid now, 3 solid weeks in a row with a large green candle closing on the highs. I'm going to say it now. It's Monday morning, 6:49 a.m. I think today is going to be a pause/reversal week. I think last week is going to be the short-term top, just based on my tape reading analysis, based on what I see in the order flow. So that's where I am right now. You can even see in the futures today where we're kind of just drifting. We're a little bit higher, but we're still drifting. We're not necessarily seeing follow through from Friday, even though we're higher. I kind of feel like we're having a hangover from the party that we had on Friday with the market was just a roaring bull. So the theme today, the theme for the week for me personally, as I am either waiting for a pullback or I'm looking to trail profits for new swing trades. I think there's going to be plenty of day trading opportunity. But if you're looking for a new long, we got a couple of opportunities. So I'm going to use Twitter as the example because we had a couple of exchanges over the weekend and some pretty smart comments as far as what's available. And I'm going to go to the daily chart here to illustrate the point, which is simply, I said I prefer Twitter over 35, and somebody very smartly pointed out that 39 is the resistance level. And yeah, that's actually the point of a lot of stocks that we're looking at, is that we need to start expanding the profit potential on some trades to justify accepting risk. So the profit potential on Twitter is relatively $4, depending on where you end up getting involved in the trade. So you need to make sure that you're risking the right amount for only a $4 profit. This pullback here was a much better trade because it was continuing this push up and pause, where if we took out this 35 level, then we're looking at 39. So you're talking about 30 to 39 versus 35 to 39. So I think that perfectly illustrates the rest of the market. If you're already long 39 or in front of 39, don't wait for that exact price would be the target. But I think that really is a good snapshot of what's going on in the overall market. So the two stocks that everybody's talking about today, which we'll pull up using volume bars as well, these are fuel candlesticks now. So you can see the percentage gains in OXY last week, and I'll really drill it home. Look at that volume spike. If you're a regular subscriber to the channel, you know that I call that fuel, large body green candlestick with large volume coming out of a trading range, and Chesapeake, CHK as well. So the question comes in now, do you buy these after the explosive moves? Well, let's actually drill this out a little bit so you can get an idea of risk points. So we can clearly see that Chesapeake had a 76% gain on Friday, following through another 31% this morning. At least that's where it's opening. So the question you have to have in mind is, yes, these stocks are beaten up. Does it make sense to buy a stock after a 2-day 100% gain on massive volume? I am not. I'm going to make that clear. I'm not looking to get long a new swing trade after this kind of a move. I'm not looking to short sell it either. However, I would prefer to see a pause after the push so that I could manage my risk in exchange for the next move to the upside. If you're looking to get long, it looks like Chesapeake is now bid at 32 and change, which means it's all the way up here, which puts it into that same type of trade. And again, let's just draw smart lines here. Let's be good traders now, right? So if this is where sellers did something significant here, they couldn't get through this level, got through here and immediately came back in. And again, that's the global stuff. But what does this mean, right? What does this mean for the overall stock? If it's all the way up here and it's already gone up 100% in 2 days, assuming that it opens up where it's bid right now, which is 32.84, where's the upside potential in getting long today? There isn't any. That's my point. My point is you're only setting yourself up to get hammered when profit taking comes in on today's open. Wait for it to pull back a little bit, then look for the next move through this 34 level. Same thing in Oxy. Absolutely phenomenal stock that should be on your radar. You can see that we have some resistance all the way up here at 32, maybe fill the gap at 24. You can see it's already at 24. So where is the trade this week? What should you be doing here? Sure, it's going to open higher, maybe push a little bit higher, but how do you manage the risk? And we saw this last week in GNUS when we discussed this. We said buying a higher opening in a stock that has all of this move that's already moved that far is not the right thing to do. We had a couple of people do what they were supposed to do, which was let it pull back. And some people got long in the 450 area on this big day here. And as opposed to buying up here and buying into the hysteria, which is what we're kind of seeing today. So great for the stocks. Just let them pull back a little bit, or at the very least pause, and then make sure you can justify the risk. If I was long, which I'm not on those overnight, I would probably, not even probably, I would be getting out on a higher opening this morning, just because 100% move, the same reason that we talked about in Netflix a couple of weeks ago. 100% move is 100% move. At 2 days, at 100% move, I would be, Linda Raschke used to talk all the time about feed the ducks when they're quacking. On that kind of a move, I would be scaling out of most of it. If I wanted to have it as a longer term position, fine, you could trade around that core position. We kind of have the same situation in Boeing today. If you're in the community, you know that I have not been trading Boeing. For me, it just didn't kind of make sense. It kept opening higher but closing lower. And it seems like last week it finally caught a bid where now it's going to be on my radar. We also cleared this level here, which now we can actually redraw that, right? We cleared a significant level, and we do have plenty of room to go. But now it's set to open another 5% higher if all things remain the same between now and the market. So it's up in the 217 area, which now puts it all the way up here. It's below Friday's high. Friday's high was 218.79. So it puts us within distance of Friday's high. But now the percentage, it's gone from 140 to 220 in a week. All things need to pause. If you're long, I'd be trimming and trailing my profits. I'd be moving what I call moving my trailing stop loss higher. You can do it a dollar amount. You can do it a percentage. Some software moves it back. Now, again, if this is an investment for you, that's completely different from what I'm talking about and what's my universe. My universe is I want to keep cash flow flowing in every single month. I'm not looking to hold the stock and hope it moves sometime in the future. I'm looking for a stock that's going to explode 3 to 5 days, book my profit, look for another stock that can explode 3 to 5 days, move in my direction. And if I was long, which again, I'm not, the chart didn't make sense to me at that point, which I will be looking to get long on the next pullback or the next pause, I would be looking to be selling into these higher openings today if they were swing trades for myself. So next, we're actually going to take a look at work. Work actually is an interesting situation where it didn't quite pull back to the breakout. So work is slack, obviously. I want to point out here and here. These are two of the ways that we discuss, not two of the ways. This is one of the ways, the primary methods of identifying order flow. This is one tiny piece of, we're in the phantom zone in this stock right now, where if it's trading above like it did here of the 20-period moving average, you can have massive conviction that you should be looking to trade in that direction, especially if the 20-period moving average is rising. In this case here, we also broke out, pulled back, and held the 20-period moving average as well as the breakout level. So if I extend that over a little bit, you can see what I mean there. Then we traded into an inside candle. So this here prior to earnings was really the trade of the month in this stock, for so to speak, heading into earnings, and you got the blow off top in earnings. But now we're stuck between the 20 and the 50, and it's kind of a phantom zone. So we're kind of in that zone where you don't have massive conviction. It's no longer an A-plus trade, but it's still a long. So the question I'm getting is, do you look to bid for the stock long today? And the answer for me is yes, above 34. That's the area that I'm going to be looking for. The same story that we just discussed in a couple of other stocks in the airlines, and I'll just pull up one of them just for argument's sake, is we were looking for them on Friday to have a little bit of profit taking. Again, the percentage move was just abnormally large. And again, in my cash flow world, I'd like to be booking the profits, and that's what I was looking to do on Friday. So that's what I'm looking to do here again today. I'm looking for a little bit of a pause somewhere between 18 and 20. Hopefully an inside candlestick, maybe a few days consolidating, and then looking for the next move higher. Some stocks that are offering some other opportunities today. ADSK, I'm actually going to look at this on the weekly chart with everybody. You can see where we are. We are just piling into new 52-week highs. So if we go back down to the daily charts, the thing that's interesting here is we had a push and a pause, and this pause was really the perfect entry to get long, but now we're well bid. 1, 2, 3, inside candlestick, 4, inside candlestick, 5. Today is likely going to be an inside candlestick, if not a little bit of profit taking. So you need to keep this on your radar for the next move higher. I would not be buying a higher opening, which actually you can see it's lower opening. Very similar in SWKS, Skyworks Solution. You can see that we finally cleared this level at 124, but now we have 1, 2, 3, 4, 5 well-bid candlesticks in a row. If we open lower, I'm still looking for a bid and looking for it to push higher. If you're swing trading and get that higher push today, especially if you get a big spike in volume, I would, again, in my world, which we got a big spike in volume on Friday, as did most stocks, I'd be looking to be scaling out of this, or at the very least trailing my profits. CVNA, which I believe Jerry called out last week, clearing some really good levels here at 105, and this is the first day it's punching through 105. So even on a lower opening, I'd be looking to bid CVNA today as well. One that we called out a few weeks ago, maybe not a few weeks ago, maybe about a week ago, Pan American Silver actually reversed on Friday and closed higher, and looks like it's opening higher again today. I'm actually looking for this to retest and break 31 today. An interesting one that is saw some profit taking while the market was exploding, which by its very definition is relative weakness. We are actually going to be looking for this stock to open lower, reverse back above 98, and then look for an entry. We're actually trading at 100 right now, so I'm not looking to buy the higher opening. I am actually looking for an opening and the first push off the opening price to be lower, test that $98 level, and then look for a spot for it to bid. And my stop loss will be at the daily low at that point. And I'm looking for a swing trade for it to retest 106. So we shouldn't really have that much of a risk profile on that trade, because we're literally waiting for today's low to be set. Look for an entry right around the previous day's low, Friday's low around 98. So despite its opening higher, I'm not getting long. I'm looking for it to push lower off that opening and then look for an entry. So in my analysis this week, we're still long. I've been banging on the table. You should be long until you show you a reason not to be long. And I'm not saying getting short. I want to make that clear. But what we are looking to do is we're looking for last week to be a explosion top, and the market to have a little bit less volatility this week, probably start to see a little bit of profit taking in a bigger scale. And anything that opens higher today, I would be, if I was long, I'd be looking to scale out of my swing trading profits and then be looking this week for the next pause in some opportunities. So that's today's play. Make sure you have OXY and CHK on your radar. I like it better if it pulls back a little bit. If you're long, I personally be looking to scale out, but they're definitely in the news. So this is the big thing. And I saw a lot of traders get angry about this when you shouldn't. It's a matter of planning and acting like a professional. even if they don't trade for you today, even if they're not signals for you today that justifies the reward, justifies the risk to accept the reward, they must be in your list. And you got to cycle, work the keyboard, like we call it in the community, and make sure you set alerts at price levels that matter. A lot of these stocks that are going to be pausing, pulling back, you need to set a level where it says, okay, if it gets down to there, that makes more sense, which is usually a 50% retracement or the 20-period moving average. So those are the trade ideas for the day. I'm not saying bail on those opportunities if you happen to be long. Trail them higher, but don't let what happened to American Airlines on a lot of people last week where the thing pulls back. I don't remember what the percentage was, but if it's a short-term swing trade and you're looking for a price to get out, make sure you're trailing that profit on the way up so that if it pulls back, you get to lock that in and you get to see 100% gain. That's a pretty big move. So have a great day, everybody. I'll speak to you soon.